You can put them on every day. You can use multiple instruments, and it can be a great source of income like you see on these premiums that you receive. What's going on? It's Ryan here, CEO and head quant at happytrader.io. In today's video, I'm going to be showing you the real, actual way to trade the iron condor. You may have seen folks claiming that, they can teach you how to trade the iron condor. A lot of those folks leave out the risks involved. A lot of those folks probably don't have the business, and I don't mean to throw shade, but probably don't have the business telling other traders how to trade the iron condor, because a lot of the information that I'm seeing out there about the iron condor is not correct. So this is going to be a very intensive focus on the iron condor strategy. We're going to be using the 0 DTE to 1 DTE time frame. This is going to be an income strategy, and also, we're going to get into when it's maybe not smart to trade an iron condor, when it might be smart, when it's optimal versus when it's suboptimal. All of those things are going to be in today's video. The market is closed today, so we're going to be doing a video. We're going to do a lesson today. Buckle in. This is going to be how to make income with the iron condor. So the first thing you want to do, if you have something like Happy Trader, it's great. You don't necessarily need it, but it does really help to be able to see what the market is kind of more likely than not to do. And if you look at some of our other videos, you can see our back tests kind of reflect just an overall confidence in these uptrend and downtrend signals. Now, the same can't be said for these buy and sell signals, because everything that we've coded and tested is baked into these signals. We back tested this particular indicator for 2 years before releasing it. We had soft launched Happy Trader last year in 2023, early in the year, as an options trading platform. Now we've pivoted to where you can trade one share of stock. You can get granular, you can paper trade, you can pick what time frame you want to hop around to, and all that stuff. So if you're a swing trader, you can take these massive uptrend signals, and you can see, if we stretch the chart out, just how big some of these moves actually are. And you can see they are, even on the regular size moves, these are big moves. So, going from 47, 46 down to, 46.88, I mean, that's nothing to scoff at. But we're going to get into the iron condor, and let's just assume that, we are using Happy Trader. Let's go to a short time frame, just like the 5-minute chart. This is what most people are going to be trading off of intraday. If you want more signals and you are using something like Happy Trader, you can go to like the 3-minute chart. And if you have more trades that you need to put on, and you have the time throughout the day to put those trades on, but you want to see the most opportunities for continuation moves, you may want to trade at the 3-minute chart. You may even want to trade at the 1-minute chart, because you can get some of these really crispy, clean signals. And also, it depends on if you're holding to expiry, if you're scalping, all that stuff. Now, if you're holding to expiry, what I recommend, and disclaimer, this is not financial advice, this is how I like to trade. So if I say you, it just means, potentially could try this. You don't have to. But what I like to do is trade on the 5-minute chart. So if I'm trying to put on like maybe 1, 2, possibly 3 trades per day, maybe the 5-minute chart for that. Okay, so getting into the actual strategy of the iron condor, the first thing that we would do is try to identify a day where the markets are divergent. And on TradingView, you can see right now all of the futures are down, but we do have a frozen market. We have a couple things kind of moving and shaking today, but overall, the markets are closed and, not being traded heavily today. There are certain aspects and sectors of the market that are open, But if I see a divergent day, that's usually a good day for me to start looking at the iron condor, meaning, you know, when do I trade the iron condor compared to when do I trade vertical spreads? So trading vertical spreads would be if the market's down, if we have, let's say, a vol-D reading, advanced decline volume in the negative, if we have, all of our indexes down, if we have like Bitcoin and Ethereum down and all that stuff, that's when I'm going to be trading like mostly call spreads, right? So why would I want to go into an iron condor unless I believe that the market's going to be kind of all over the place? Now, if you go back to the SPX, what we can see is that if we were to have divergent markets, let's say we had the SP positive, the NASDAQ and the Dow negative, whatever, right? Whatever combination of the three, that's going to give us the opportunity for a more sideways market, like we've kind of been seeing, and that gives you opportunities to sell. Now, when you sell an iron condor, typically you're going to sell out of the money on both sides, and you're going to be collecting theta decay, which is why folks like to trade this strategy on the 0 DTE or 1 DTE time frame. Some folks like to trade on the 90 to 120 because what that does is it lets you, if we compress the market, instead of trading like here and here, if you're trading 0 and 1 DTE, you're able to trade like all the way out here and collect the same premium, but you have to wait longer. So what a lot of folks do is they take their margin to count, and depending on how much margin they have in the account, meaning how many dollars are deposited in the account, they'll be able to put on these spreads. Now, the most efficient form of these spreads are going to be your naked strangles, which are going to be where you just sell a put and a call out of the money. You're collecting the pure theta decay. Now, to cap your risk, what I prefer to do is sell, let's say we sell a call here and then we buy a call here, and we sell a put here and then we buy a put here. So that way there's a capped max loss. So let's kind of look at what that would look like. So let's use this latest downtrend signal as, an opportunity to put on a leg of an iron condor. And that's the other thing about condors is you don't have to put them on at the same time. So if you're seeing, let's say, you know, on Happy Trader, you're seeing a sell signal and a downtrend signal on the 5 minute, and let's say all indexes are down for the day, well, first thing we're going to do is go into our options chain. The next thing we're going to do is go to our nearest expiration. This would be a same day expiration. So this will be, tomorrow's expiry, and we'll just go back in. And what you can do is, just kind of get to at the money. You can see that when you start to see the gray against the black backgrounds there, you can tell. So, the call side, what I like to do is get out there in delta, far out deltas. So maybe 5 to 8 delta, maybe 12 to 16 delta if I'm feeling particularly risk, averse. I will sell further out of the money if I'm feeling risk tolerant. I'll go closer to the money. Kind of just depends. But as far as width of the spreads, you have to watch that a little bit because, you know, if you go super far out in width, there's not a lot of liquidity on some of those strikes. You can see the volume here. So the closer you get to the money, the more open interest there's going to be. And that's just the way that the market trades. So one thing that you can do to capitalize on theta decay would be to find a strike with some meat on the bone. For me, I mean, I'm really liking the 12 delta, and this would put you at the price. So we're at 5,005. You'd need to sell at 5040, which is the 12 delta. You'd need to breach that strike, you would need the S&P to go up to 5040. Now, could it do that in a day? Yes. Could it do it intraday? Probably not as often as it would do overnight. So this would be a day trading income strategy. So we would just go into the trade, and then we just have to determine, hey, what width do we want to sell this spread at? And what we're going to do for that is go further out of the money. So if we're collecting $180, let's say we have a target, maybe it's around $100 that we're looking to capture. So we can set this thing pretty tight. So a 15-point spread, that's going to be a insanely tight spread. So we can make sure that we're looking at the correct strike on our trade. We're selling a call at 50.40, buying a call above that at 50.55, and then we're going to look at the snapshot analysis. And you can see here that on this leg of the iron condor, the call side, you can see that the price of the security is here, and it would have to move all the way to here at expiry on this top line. Let's zoom in just a little bit. It would need to go to there. So you might see negative P&L throughout the course of the trade. You can see that if we get like right here, you can see the theoretical P&L under the mouse is 303, but you still collect full premium if you don't breach that strike. So whatever your sold strike is, if the market doesn't travel that far, if this market does not travel all the way here, which is a far distance, you have a chance to win. And you can see that reflected in probabilities. You have your direct probabilities right here, 84%, 84.06%. Probability of not just profit, but maximum profit. Max loss, probability for maximum loss, 7%. Now, we want to make this thing into an iron condor, right? So what we're going to do is go back to the options chain. Now, what did we do? We sold the 12 delta. Let's go ahead and have a look on the opposite side. So the put side, let's say we had an uptrend signal. We want to put our other leg in. So we want to do, put selling is what the name of the game is going to be there. So we're going to look for some meat on the bone, and you can see there's a little more meat on the put side. So, that's a little bit telling because a lot of things are baked into the options. Now, just assuming we just want to collect around the same amount of premium, we could go ahead and sell this 20 wide, so a little bit wider than this side. It's not always going to be identically symmetrical. And now E-Trade's going to call this a custom spread because the widths are not exactly the same. But if we're targeting credit, that's going to be a different story compared to if we're just trading delta no matter what. So you can target premium or you can target delta, right? So you can either be somebody who just sells 5 to 8 deltas no matter what the premium is, and you sell at a fixed width, which is going to give you equal sensitivity to the underlying on both sides of the market. And you have to remember when you put this trade on, now we can look at the snapshot analysis and see with both sides of the condor, you are able to see the price here. And, if it moves too far in one direction, you can manage the trade. Now, if you're trading 0 DTE, 1 DTE, the only real management technique that not only works but makes sense from like liquidity purposes, like let's say the market moves this way, right? So the market's just like kind of creeping upward. It's threatening your call side. Something you can do, there's a couple ways that you can manage this. It depends on your buying power. You can roll up the winning side for more premium intraday is going to be your best intraday bet to equalize this graph and kind of keep this pinned in the middle. So it's just like a game of pin the tail on the donkey, and you're just trying to pin the tail right in the middle of this P&L graph. Now you're going to go, crazy, P&Ls until you get to your expiry, but that's really how you're going to trade the iron condor. You can see this side also has a very high probability and time decaying throughout the day, assuming that the price stays within your profit zone, is just going to give you profit, and then you're able to close these early for a profit if you're somebody who wants to avoid end of day volatility. So that's going to be the iron condor. You can put them on every day. You can use multiple instruments, and it can be a great source of income like you see on these premiums that you receive. Also, you receive all of the premiums up front, and which is phenomenal. So this is Ryan from Happy Trader. Have a great day and happy trading. Hope this helped you in some way.